Are you just getting started with TradingView or just curious and want to try something new outside what you have been using for this past few? Here is actually how you can set up your chart in few minutes and get started with TradingView in advance. First step, what we want to do is open TradingView and select the stock of your choice. In this case, at the moment, we're looking at NASDAQ 100 index. Let's go ahead and use something common that we all know. In this case, I'm going to choose Disney, and I will apply Disney on my chart. And on this chart, what we're going to do is we're going to go ahead and adjust the time frame. But before I go ahead and adjust the time frame, I want to change the way the chart look. First of all, shortly, I want to remove the after hours and I want to remove the pre-market session. So I'm going to go to this bottom corner here where it says extended trading hours. I'm going to click on that and just go with regular hours at the bottom right. Bottom right corner of the chart. Okay, and that will give us the clean data. Okay, that matters most to the market. Every single data is important, but here, okay, we have transformed that our chart to regular hours. The next step that we want to do, or step two, after choosing the stock of our choice, is we want to adjust the time frame. First of all, we want to go with the time frame that will give us the forecast, and then we'll use that forecast in a shorter time frame to give us uh, what we should be trading at in a shorter time frame. For that reason, let's use the 4 hours. According to the 4 hours, or the 4 hour chart, the 4 hour chart is necessarily, I would call it, it's trending upward at the moment. Okay, or actually not really trending upward. We're having a pullback here on a 4 hour chart, but generally the 4 hour chart had been going going down in this past few, except just briefly recently. So what we want to do at the 4 hours is we want to see the direction that the stock is starting to take. If you know candlestick pattern, here we have what we call double bottom. We have that and we have this. That becomes a double bottom. Okay, so with that double bottom, we are expecting, that would mean that we are bullish. We should start seeing a bullish or rather a bullish trend coming up here or forming up here, and that is what this is showing us right here. Okay, so we should be starting to see that bullish trend form up. Anyhow, after we have looked at a 4 hours chart and we have confirmed what the direction of the trend, we're going to go ahead to the shorter time frame to get a clear view of the price movement. I mean, we have gotten a clear view of the price movement, but we're going to go to a shorter time frame to see where, which what would be our trading zone, or what would be the areas of values that can trade. Okay, so if we take a look at the 15-minute chart as an example, on a 15-minute chart is actually painting the exact same picture we just looked at. We have a we have uh, a shoulder here, I mean a bottom here, and then we have a bottom here as well. So there is a double bottom on a 15-minute chart as well, meaning the 15-minute chart is also telling us the same thing. Okay, we are bullish on a 15-minute. First of all, we are bullish on a 4 hours, we are bullish on a 15-minute chart. And if you like to trade shorter time frames, which is what people normally use a lot, the 5-minute chart, you look at the 5-minute chart. The 5-minute chart is telling us the exact same thing. And by the way, as a disclaimer, what works for me in this setup might not work for you. And also, in addition to that disclaimer, this is not any cherry picked chart. We did not, or I did not go ahead and pick this chart ahead of time. This was just a random thought that came up on what we would try to use. Okay, all right, let's continue. From where we are, we see that we are bullish on both 15 minutes, 5 minutes, and 4 hours. Okay, in addition to that, let's go ahead and move to step three. On step three here, if we want to paint the picture more clear, we can change the candlestick pattern to something else. What we want to do is go to the top of your screen here where it says bar styles, click on that and get the drop down. And I like to use, again, what worked for me might not work for you. I like to use Heikenashi. I'm going to go ahead and pick Heikenashi, and then the Heikenashi will paint the picture for me. First of all, according to the Heikenashi, here's what you can expect. Where the candles are green, expect up movement. Oh, I mean, expect that the market is bullish where the price is green. Okay, but where the price is red, or where the candles are red, those are bearish market, or bearish moments, or bearish momentums. Okay, and also they, at the same time, the Heikenashi does tells us one more important thing. The size of the candles here tells us the volume of the market at that particular moment. Okay, the larger the size, the stronger or the higher the volume. The smaller the size of the candle, the weaker the volume at that point of time and in that direction. For example, if you look at the top here, if you look at the very top here, you will see that there are candles which are dojis, which has narrower bodies but taller wicks. First of all, it's telling us that there's activities there, but there are very small volume. Okay, so that could be, or that might be our reversal point, which of course, as soon as you see a doji, which is a candle with wicks on the top and the bottom, that is our reversal candle that we are looking for if we are trading Heikenashi. Okay, I'm going to go ahead and remove my drawings. All right. So to trade, here is how you will quickly trade Heikenashi. To trade Heikenashi, you will wait for a candle color to change, or a candle to change color. But before the color change, you're looking for a doji candle. A doji candle is, again, is a candle that has wicks at the top and at the bottom, which, let's take a look at this one particularly. Let's take a look at that right there. That is a doji. You're looking for a candle like that, which is followed by another candle that does not have a wick at the bottom for an uptrend. And the same story applies to the one for a downtrend. We are at that point where we have the doji right there, and that doji is followed by a candle that does not have a wick at the top for a downtrend. Okay, now that we have, we have customized our chart, our candlestick pattern, let's go ahead and take a look at something really quick. The next step that we want to do is we want to add some key indicators to our chart. Okay, first of all, the one thing that I like, or a lot of people like to use, is what we call the moving average. So to do that, to add the candlesticks, I mean, not to add the candlesticks, to add the indicators, go ahead and click on the indicator section of your TradingView, which is at the top of your screen. Okay, and then search for moving average, and under moving average, go down to under technicals. Okay, under technicals, you're looking for simple moving average, or moving average simple, let's call it. That's what it is titled, moving average simple. We click on that, we apply that to the chart. Once we apply that to the chart, we use that for entering the trade in such a way that if price close below the moving average, we take a trade. But first of all, before we do anything, let's change. If you like to use the period, we'll leave everything as it is. We're just going to change the length of the period. We can change the length to 21 for a lot of reasons, so that we are avoiding all the false signals. Even though it might be laggish for a lot of people, it might have a delay for a lot of people. So if you don't like a lot of delays, turn it back to a shorter time frame. Okay, turn it back to a shorter time frame. This is like your this should be your preference. You can use a default, which is nine period. Normally, by default, 9 period is going to be applied to your chart. You can trade with that perfectly fine. But then the only thing is, you might have to trade a shorter time frame. Say, for example, this is a 5-minute chart. If we change this candlestick, if we change this to a shorter time frame, which is a 2-minute chart, you will see that you will have more advantage to enter the same trade. However, the downside is that there's going to be a little more noise. This is where we marked those dojis earlier. We have the candles cross above the moving average, and here would be it would be your panic. Someone would have panicked here and be right, we are exiting. But as long as you haven't closed below the moving average, and the candle hasn't crossed the moving average and closed below it, you should not be panicking, or you should not worry. And an example of that is right here. Oops, just a moment. An example of that is right here. Okay, at that point, that is okay, or actually right here. At that point, we close below. We crossed below the moving average, and that would be where someone would exit from. But note how the previous candles were also dodges. That is a red flag. So that's in this kind of scenario, you wanna get out of those. Okay. So if we go back to if we well actually not even going back to any other chart. Let's use this chart for the rest of the analysis. So with that in mind, I'm going to go back to 5 minute chart, which is what everybody use. Personally, I don't use 5 minute chart a lot. I use 7 minute chart because that puts me between 5 and 10 minutes. So I use 7 minute chart. With 7 minute chart, the advantage is that I eliminate every single noises, and then I get a perfect best entry, which is highly conformed, and that just puts me in the trade right away in a more profitable way. Okay, with a 7 minute chart, yes, I have more advantage, and I can see things more clearly. All right, all that aside, the next step, well, here we have added our moving average. You can go ahead and add other things. For example, a lot of people like to use Bollinger Band, or a lot of people like to use other things like the MACD. Um, let's say, for example, we want to add the MACD. There are multiple versions of MACD. You want to go on the technicals, and you're gonna get that moving average convergence divergence. You're gonna apply that to your chart. That is going to be what you will be trading with. And this is just a simple, a quick explanation, or a quick overview of how this works. For MACD, you're waiting for a price signal to cross above the signal, which is the blue, to cross above that orange. And actually, as a matter of fact, let's go ahead and make some adjustments here. We're going to change the blue we're going to change just the color here. We're going to change the blue to green to indicate uptrend, and then we're going to change that orange to red for now. Okay. And don't ask me why I changed it to red, just to visualize the bear and the bull. That's the reason. That's the whole point here. All right, let's say here when the green cross above the red, you're gonna take your trade, and notice we are above the moving average over there on the uptrend, on the actual candlestick. We're above the moving average. Okay, and then where we close below the red, the one which is on top takes control. In this case, the green is on top, green takes control, meaning we are bullish. In this case, the red is on top, meaning red take controls, meaning that we are bearish. So where they cross each other's, right after they cross is where you enter the trade. Right, for example, right here. Okay, they cross right here, you would enter the trade on the next candle, which is right about here. Okay, and that actually perfectly aligns with our moving average, even though it's 9 period. And you stay in the trade until you see them crossing again. Okay, as long as they haven't crossed, you will stay in that trade. You will stay in that trade. And that is a brief explanation on how MACD work. All right, aside with all that, the next thing, or the next step is we're gonna go ahead and you can go ahead and save your, if you're comfortable with what we have. The next step in the setup process is that you're going to save your chart. And to save your chart, look at the top right corner. um, this might be called unknown, which is a unnamed. Actually, it might be called unnamed. So when you see that something called unnamed, you can rename that always, and then click on save. Once you click on save, that will apply as your default chart, which will apply across multiple other charts that you have. Okay, this so that if you click on any other chart, all this will apply automatically. For example, let's save this, and then let's look for a common other something else. Let's go back to the Nasdaq. Okay, and the X, that's for Nasdaq, and you see that this applies across Nasdaq. Okay, and here we are. And so for example, today, if we're trading 7 minutes, you see that MACD cross right here. We went above that moving average, and everything turned green, and we rode that just perfectly fine. And same story here, MACD crosses, and we were above that, we went green, and just like that. Anyhow, with all that aside, now that we have saved it, if you still have questions that you have not understood anything that we have done here, and I just feel bad for you, but in all things that we have done so far and talked about, I would say at this point of the video that we have come this far, please just leave a like, subscribe, subscribe to this channel, and just click that notification bell so that you're not missing most of the rest of the tutorials that I'm going to be passing along, which are all free, of course, and that will enhance your learning capabilities as far as trading is concerned, so that you are not missing anything or a cent from the market. Well, I'm actually, since you are still here, I'm going to give you a bonus. The bonus is I'm going to give you something which we call uh, the, 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 the simple, not actually simple moving average, the wave trend. I'm going to give you what we call the wave trend. Wave trend. So if you go ahead and type wave trend in the indicator section, go to the indicator section and type wave trend as one word. That will be, go to the community. You will see this wave trend by Lone Star. Okay, go ahead and click on that and apply to your chart. And you will see that what this wave trend does is it actually, where you see the yellow candles, if it is above your moving average, you're going to take a trade right away. Okay, you're going to take that trade, and once you take that trade, you're going to stay in that trade. You're going to exit the trade when you see that doji like that or like this. Okay, and even though it's noisy, if you're trading a shorter time frame, you will see that this becomes a lot clearer. Actually, you have your entry over there before even the MACD, probably the MACD. Oh, actually, right after the MACD, you have your MACD right here. You wait, and that confirms. Well, this was almost a bear, but this is false because we are still almost above that moving average. So what we will do is we're going to go ahead and get that confirmation, and then we enter that trade because the MACD is positive. We stay in the trade, and then we just get that entry. Perfectly beautiful, beautifully beautiful, beautiful, beautiful. And if we take a look at this, at um, today's, if we take a look at this at today's market in the option chains, let's take a look at SPX. You will see what that does. If you take a look at SPX, let's pick something to do with call. All right, here, let's take a look at that. Okay, according to a call option, let's put this in a 1 minute chart. That last minute thing that I showed you is what actually caused this entire green thing. Okay, so that changed the whole entire game, and that's why this chart is that green. But anyhow, without taking a lot of your time, if you've loved this video, or if you've liked this video, or if this video has helped you, go ahead and leave a like, subscribe to the channel, and just share the video, and you know, ring that notification bell so that you're not missing anything, and check me out for more educational content, so that we are staying in the loop and interacting with each other, and stay strong. Happy trading. Daniel Trader, in and out. Have a good time. Bye.